Good morning. It's Market Day Report. Welcome to another week. By the way, we're working our way towards Wednesday, the final trading day of April. So we'll put a pin in that, come back, talk about that more in just a moment. First off, overnight trade action for the corn market. We were lower. Look at the sixes across there. And the December down 6 at 449 3/4. What about the soybean trade in the overnight session? Down 5 3/4, 1029 1/4. Soy meal overnight was lower and soy oil lower as well. What about the wheat market? Could it have been higher? Well, it could have, but it wasn't. 534 1/4. Down 10 3/4 cents. Hard red or Kansas City off 8 3/4, 542 1/4. And spring wheat, Minneapolis, December at 630, 9 1/2 lower. Finally to the cotton market, down 110 points, 68.87, settling overnight at the low. Brian Hoops is president, Midwest Market Solutions. All right, Brian, that's how we'll start trading this week. What are you watching?
Hey, good morning, Tony. Hope everybody had a great weekend. Yeah, watching, these markets trading lower in the overnight, probably going to open lower here this morning. No export sales to speak of, and export inspections at 10. Then we have crop progress later this afternoon, 3 o'clock Central Time. Now, that report, I think, is probably going to show corn planting nationwide in that 20 to 25% completed range. Soybeans could surprise some people as we've been putting a lot of beans in the ground early. So maybe you're looking at 18 to 22% on the planted side there. And winter wheat conditions expected to improve this afternoon. We had good rains across a lot of that hard red wheat belt last week. Might see a 1 to 3% improvement in winter wheat conditions. And then probably going to see another improvement next week because there's more rain in the forecast for that Kansas, Oklahoma, Texas region that has been so dry. Now that may be offset with some flooding concerns in soft red wheat country. So look for Kansas City to gain against Chicago as far as improvement in ratings. And that means maybe weaker prices in Kansas City and Chicago gaining in price against the Kansas City market. Certainly the option expiration that we had on Friday contributed to the weakness overnight in the grains. And we have first notice day coming up this week on Wednesday. So by Tuesday, there'll be some more positioning, more rolling out of those May positions into July or into September, December contracts. Get away from that delivery period because you just don't want to go through deliveries. Other than that, we're looking at weather and growing conditions. South American harvest progress is still slow for soybeans in Argentina, but on normal pace for corn harvest in Argentina, normal pace for beans and corn harvest in Brazil, which are wrapping up rather quickly.
All right, before we go to break, precious metals, gold. Will you be watching that this week?
Yeah, always you have a corner of your eye on that gold market. Now, we've set back off of our highs. That 3,500 mark acted as a major resistance. We've pulled back. I think you see a little bit more pullback or a little bit finding this technical support area. Should be a lot of buying interest in that gold once again. Until the trend change, I think there's going to be buying interest from the speculative community in that market.
Yeah, and as we go through gold, also looking at the silver market and silver starting the day in mixed territory. All right, Brian, hang on. We'll come back. We'll talk livestock futures and cash cattle prices from last week. Market Day Report continues in a moment. Moving cash cattle last week, about 212 to 217. Wait, 212 to 213. That was in the south. Now, we did see 215 to 217 in the north, and then dressed at 340. What's interesting is that this is really putting a squeeze now on the packers. So that's a story that's going to be probably a headline story this week. Okay, on Friday, we settled the market in mixed territory. Front 2 months for live cattle. That April contract will expire on Wednesday. It went down at 214 1/4 on Friday, up 75. And again, you can see where the deferred contracts were. What about the feeders? Feeder market higher across the board. May 290.52, $1.45 higher. And then the hog trade on Friday, We saw higher trade with June and July settling both above 101. Let's go back to Springfield, Missouri. Brian Hoops. All right, Brian, what are you watching here?
So yeah, getting into the end of the month this week, that's usually produces some positioning, some movement in the cattle market, especially. And we've had such a nice run in the last 2 weeks. Certainly could see some sort of a correction or pullback. Now the cash markets were steady to higher last week, about $3 better on a lot of the live trade. And that has not helped the packer margins out. Now the cutout values have improved as the slaughter pace has slowed down considerably. Compared to the prior week, we were over 18,000 heads smaller, and compared to a year ago, the same week, 54,000 heads smaller. Packers really cutting these kills, trying to make up for some of their lost margins, but it hasn't worked yet. They're still paying higher in the cash markets, so their margins are still over $130 in the red, which really is unsustainable. No doubt this week they're going to look for something to break. Maybe the futures market pulls back, trying to keep the cash markets down, or even slow that slaughter pace even further, which is going to be difficult because demand is still pretty decent for these cattle and for beef overall. But you may see some sort of a correction in here. Again, probably going to be a buying opportunity. A lot of the speculative community wants to get long on a break in the cattle market for the spring and summer highs, looking at grilling season just starting up. You just passed the Easter holiday, so now you're looking at Mother's Day, Father's Day, all good grilling holidays. Demand would no doubt pick up on any type of a break in the market.
Well, Brian, always great insight. We'll see you back here on Wednesday. Brian Hoops is with Midwest Market Solutions.